building a financial model, it's really not so complicated today because most of the funds, they're pretty much using the same math. They're calculating a multiple, they're taking the net tangible assets. Usually what they won't do is include the net tangible assets that drove the revenue in the net tangible asset calculation. And the reason why they use that is in order to reduce the costs for them to buy the company. This is a big reason why you want to work primarily with strategic buyers versus like going to a lot of these buyout shops.
Hey, hi all. Welcome to another podcast of Investment Banking Decoded, where we are connecting with the experienced bankers from the US region. Now, today we are joined by Mr. Marcus Magarian, who is the managing director at Tracxn Securities. With more than 20 years of experience spanning investment banking, capital markets, and enterprise technology, Marcus advises multiple sectors, multiple geographies, and the companies on M&A, capital raising, and cross-border growth. We are excited to hear his insights on technology, deal making, and navigating global markets. Welcome to the show, Marcus.
Thank you for inviting me. I'm happy to be here.
So, to start with, I would like to understand your background and some key milestones in your career and how you came into investment banking world.
Well, when you grow up in New York, investment banking or banking in general is kind of the thing to do back in the 90s and 2000s. I literally started my career at Morgan Stanley being an OTC derivatives trader, then moved to do the same thing at Merrill Lynch. And by that time, you started having more of this talk about globalization. So I ended up doing an MBA in Europe. And after that, opening a Brazilian bank called Banco Votorantim in New York and London. And so we started doing, and we were very lucky because that's where you had all that wave of brick investments happening from 2008 to about 2014. And we were building funds, doing infrastructure projects, renewable energy, lots of IPOs for the emerging market space. We were partnering with groups in Japan. We're partnering with groups in Europe, including India, including China, including the biggest was Japan. And we were building a country. It was a very exciting time. We were traveling a lot, working a lot. We were experiencing so many great things, a lot of success. You could see the difference when a market is hot and when a market's cold, kind of from that experience. And then from there, as things started cooling off with the emerging market space, I jumped into a SaaS company doing UX analytics, basically how consumers consume digital platforms. So if you go onto a website to buy cosmetics, how does a person behave? And what you learn is that no matter how good you make something, which is actually very helpful for investment banking, no, it's not always that the other person is going to know what you're actually saying or displaying or showing them. So it was a very telling thing. So the difficulty someone would have to buy an air conditioning system was something that never crossed my mind. Or the simple things that we used to do all day at Morgan Stanley and Merrill Lynch was fill out forms. You could see statistically and mathematically why, how people are doing that. And at first I thought it was completely crazy. It's like, it's such a simple thing. But when you look at the data and a million people are trying to fill out the same form, you could easily see how many people have difficulties doing something. So you really learn that UX was a salesperson. Jumping from there, coming to Chatsworth, we really focused on the payment space. And the reason why that happened was I noticed that no matter how good a customer journey was, if they couldn't pay for the product, it wouldn't make a difference. So then we went to fix that. So most of the deals that my team was working on was in the fintech space. It could be POS systems, it could be payment systems, it could be banking systems, digital banks, etc. And today we're focusing very heavily on the artificial intelligence space.
obviously the AI is the buzzword in the market right now. So since you mentioned about the deals, I would like to if you can you share some notable deals, something which is memorable to you, some of the recent deals which you have worked on?
I mean, at Chatsworth, most of the things are quite confidential just because of the nature of the business.
Yeah.
Um, I mean, we have I, discussing like actual deals. Like I could tell you experiences that I've had that are kind of
Yes.
interesting. Every time you
Please.
do a deal, there's something always unheard of. There's always like a mistake a lawyer makes. There's always a surprising thing that like founders make. Irrationality is something extremely fascinating. You could have people get 7x offers, especially in France, 7x offers, and they won't take the deal, even though they'll make 7 times more because they don't like the buyer. In the United States, these are like things that are unheard of. In terms of like success, we had a deal in the public safety space that got sold to an American buyer. We had a deal that was in the CBRS space that got put into a SPAC. We have deals that just simple, plain vanilla M&A deals, a number of debt deals, a deal which we were able to secure A321neo for a commercial airline. Um, that was uncollateralized, very surprising that it went through, kind of thing. It's a lot of like figuring out the puzzle. It's figuring out like what exactly the person is willing to, uh, the buyer, the seller, the lender, what they're willing to do, and how we have to tweak opportunities in order to make them fit into their LPA or their their debt agreements, the agreements they have with their LPs, etc. But you definitely nowadays see a lot of different things happening in the market versus like 20 years ago. Yeah.
And being an advisor, it comes your responsibility to sail through this and make sure that finally the deal is happening.
Yeah, a lot of the times it's getting 95% of a deal done is very easy conceptually. There's I always tell people that 70% of a deal is psychological, more 80-90% of a deal is psychological. Building a financial model, it's really not so complicated today because most of the funds, they're pretty much using the same math. They're calculating a multiple, they're taking the net tangible assets. Usually what they won't do is include the net tangible assets that drove the revenue in the net tangible asset calculation. And the reason why they use that is in order to reduce the costs for them to buy the company. This is a big reason why you want to work primarily with strategic buyers versus like going to a lot of these buyout shops, especially because most of them are getting their capital from lines of credit from banks that they're setting up. If it's a Capital One, if it's a family office, if it's some group that extends some kind of line of credit with them. And that's like a common thread across a lot of players. If it's the lenders, if it's the buyout shops, if it's different kinds of people, it's a very interesting thing. But compared to 20 years ago, I feel like the market has homogenized significantly.
Yes,
Yeah.
definitely. So, talking about the market, I would like your views on like how is 2026 going and what are we expecting for the remaining 6 months of 2026 and 2027 also?
2026 has been an interesting year because of the fact that it's not a problem for getting offers on a sale, or it's more challenging to raise capital because of the fact that people seem to follow these KPIs that they require, these growth rates, these margins. I mean, in a higher interest rate environment, it changes the reality for the investor. And then for the buyer, as I said, like I could guess, I could price out the model pretty simply in order to get an understanding of where the buyer will make the offer. The real question is that and I always tell a lot of the deals, I'll say like, your pricing is going to be here. You want this amount. Let's say you want $30 million or you want $50 million and the buyers are offering 30 million. the gap is usually something that was priceable in 2021 in a zero interest rate environment. Today, it's a little more challenging just because of the fact that the market changed. And it's kind of like saying, like, I have a stock that's $100, now it's 10. Well, you can't sell it for 100 anymore. It's the same thing. The KPIs and the metrics and the market realities have shifted. So you can't just simply say, oh, well, in 2021, I could get this. Well, welcome to 2026. It's a little different today. But yeah, I mean,
So what do you think are the sectors that will be booming in the upcoming years? Any particular
what,
industries or sectors?
which sectors you're saying? Which sectors are?
Like, according to you, which sectors would be getting more traction in the coming months?
I think that, I mean, honestly, like I could tell you that a lot of the deals we had in the past, like in the payment space or in like the aviation space, those are softer now. AI is obviously the thing, and it seems like it's not even that the sector is going to be hot, but it's going to be how, not even if in 2025 it's like, or 2024 was like, you're AI ready, and today it's kind of like, okay, you're AI ready and what? And we've been building a lot of things in our group that allows us to track things digitally in ways that, like, we do not even see products that do this built in the market yet. And I think that there's even products today that, or companies today that people are not aware of, that are going to be hot in 2027. In 2026, the biggest difficulty, as I said, the hottest sector is kind of hard to see simply because of the fact that the market's kind of trying to figure out exactly what to do, and it's still, a lot of the market is still stuck in a time from 4 years ago. I still feel that founders still have the hope of having these very high pricings, very inflated realities that no longer exist. I mean, we were working with deals in the food distribution space. That's kind of an interesting market when it comes to, like, especially the ethnic food groups. If it's Middle Eastern, if it's Hispanic, if it's Asian, there's different buyers looking to penetrate that market. And what we're seeing is that sectors in general, the play seems to be roll-up strategies more and more. Like, we had a guy who was buying ice skating rinks, and he was buying them to install camera systems and Bluetooth technology where he would not allow the patrons to take photos or to videotape. They would have to pay for a subscription. And all the Pee Wee leagues in the region were owned by this one individual. Before, in like 7-10 years ago, rolling up HVAC systems was like a big thing. And I'm seeing that the hottest sectors now are the sectors that are kind of where no one's looking at anymore, because over the past 20 years, everyone's getting an MBA. Everyone wants a job as an investment bank. I could tell you that the sectors that seem to be the hottest now are the ones that nobody wants to actually work in the United States. Like plumbing companies, roofing companies, things you have to use your hand. AI is ultra crowded. Everyone's doing the same thing. You know, there's always an AI agency. There's always a guy who's doing something where it's like, I'll improve your JSON LD. I'll build you a blog poster. I'll do a thing for some kind of how to improve your visibility on artificial intelligence or other LLMs. That's the hot thing, but I can't say it's hot simply because it's overcrowded already.
Yes. So talking about AI, I would like to understand, like, how is AI impacting the investment banking industry, and how are you incorporating in your daily workflow?
Honestly, artificial intelligence is making our work much more effective, much more impactful. It's allowing us to do work significantly faster. We're able to build entire custom code products for our bankers. We have the ability to analyze things that were not even analyzable. I could analyze things that Google Analytics and Bing does not do yet. I'm sure they do it, but they're not offering it as like their GA4 or their Bing Webmaster product for the open market. The most I see is like Bing AI the AI tool, but it's still in a beta format. And we're running processes, and we're starting with our bank. Um, how is the visibility of our bank across all the LLMs? How are we on Perplexity? How are we on DeepSeek? How are we on Grok? How are we on ChatGTP? How are we on Claude? Everything. And what we found is that we don't exist in DeepSeek, so we're not known in the Chinese LLM. We're kind of known on Gemini. We're heavily known on ChatGTP, Claude, Perplexity. And then the question becomes, how do we fix that? Then the question is, how do we offer that service to our customers? And when I analyze the market, what I don't see, if it's a lot of the major investment banks, a lot of their sites are not yet coded for LLMs. You know, they're still very heavily coded for SEO, but they're not coded for the LLM space. I think the weakness, though, for all these AI tools and all those things is that it took me years to really be good at financial modeling, and it's really an art. I start seeing it like kind of like moving water when I look at cash flow statements, etc. I'll see it, say there's something wrong over here. Now it's at a point where, like, I could build the model super fast. It's not a problem. But a younger person who's getting into the market, what you learn in school does not teach you the realities of doing M&A in the open market, especially when you start changing countries. I think it'll be an impact for the younger generation. Like in France, which is a problem for a lot of companies, they use an IFRS standard. In the US, we use GAAP. GAAP is a cash only product. It's a cash only accounting standard. In France, I could incorporate costs into my cash flow statement, which means that if I spent $10 million getting from the BPI to develop my code, I could put that on my cash flow statement as a thing called production mobilisée, and I could claim it as revenue, but it's a cost. You take that same company that was doing 10 million or 50 million or 100 million, and you have all these non-cash revenue things on the balance sheet, your real cost goes down, your valuations tank. And it's an incredible thing to learn when you start work. I mean, I've worked very heavily with Brazil, very heavily now with Europe, and obviously throughout my career in the United States. And those things you won't learn if the AI does it for you.
Yes. So talking about younger generation, my last question here would be that what's your top piece of advice which you want to give to someone who's just starting the career in the investment banking world?
Ooh. Honestly, I mean, the way the investment banking space seems to be going is that a lot of the very talented investment bankers, they're staying at the big banks, like the well-known brands that everybody hears. They're either going there. I mean, traditionally, it's always been like this. I mean, you graduate college, you get put into a feeder program, and then you get a 2-year analyst track. If you get moved into associate, then you move up the ranks, or you get a 3rd-year option staying as an analyst. A lot of guys from the big banks are becoming corporate developers. So they're working at the corporate development department, which becomes the in-house M&A division of the group. So if you go to Verizon or Hewlett Packard or Palo Alto Technologies, there is a corporate development team that is best to speak to. And then every time I speak to those types of guys, they're always from a Goldman, a Credit Suisse, or something like that. And a lot of the younger generation will probably be best if they went to American Express corporate development, if they go to MasterCard corporate development, Visa corporate development, or Apple, Facebook corporate development teams, because those are the teams that are doing the acquisitions. Those are the teams that are doing the financial modeling, doing the work. But the big difference is that when you work for like a Facebook or a Verizon and you're doing the M&A for them, you know everything about that company. You know everything that's going on. You have access to all the information. You can have meetings with in-house people. So you actually start doing more effective work for your deal flow. And because of that, and I mean, there's a statistic that I saw 9 months ago, which was very shocking. You have today 14,000 McDonald's. You have today 19,000 private equity firms. That's a lot of private equity firms. 20 years ago, before the credit crisis, you had over 20,000, 25,000 investment banks, and you didn't have this many private equity firms. So what's happened is that most of the investment bankers went to the buy side. The corporate development guys are basically on the buy side, and then the middle market and the upper echelons of the smaller market, that's where groups like ours are attracting customers, because of the fact that, that's the market today.
That's very well explained, Marcus.
So for the younger generation, I recommend you go through an investment bank, but you'll learn more about your sector working in a corporate development team, because there's so much to learn in investment banking that it's not just cash flow analysis, it's not just pitch deck building. I tell people that's 1% of a deal. Knowledge, expertise, knowing the people in all the companies, all the working in the payment space, I had to know the corporate development guys for every POS company, or CEO for every POS company, every payments company, MasterCard, Visa, etc. Who's in charge of discovery, everybody. So when we have a deal, we could talk to them, say what's going on and all those things. But a lot of times to develop those skills requires, it's easier done when you're working for a corporate development team.
That's great, Marcus. This is a different kind of advice which I've heard in the last 20 interviews. So I'm so happy that you shared all these insights with us. First of all, thanks a lot for using Tracxn on your daily activities, daily workflow. Plus, thanks a lot for being with us today and sharing your journey and expertise. We truly enjoyed the conversation, and I really appreciate you spending time with us today.
Thank you so much for giving me the opportunity. I look forward. Let's do it again.
Yes, we'll do it again. Thank you.
Cheers.